Good day. We are the Group 3. We will discuss the topic about the monetary policy and control. First is the objective of monetary policy. Before that, we will define what is monetary policy. Monetary policy. The demand side of economic policy refers to the action undertaken by a nation's central bank to control money supply and achieve microeconomic goals that promote sustainable and economic growth. And according to Professor Harry Johnson, monetary policy is a policy employing the central banks to control of the supply of money as an instrument for achieving the objective of general economic policy. The monetary policy is set by the central bank to control money supply and achieve the economic goals and to maintain the economic growth. There are two types of monetary policy. First is contractionary policy, wherein monetary measures referring either to a reduction in government spending, particularly deficit spending, or a reduction in the rate of monetary expansion by a central bank. It typically issued during times of extreme inflation or when there has been a period of increased speculation and capital investment fueled by a prior expansionary policy. These policies aim to reduce the rates of monetary expansion by putting some limits on the flow of money in the economy. Is expansionary or easy monetary policy is a form of microeconomic policy that seeks to encourage economic growth. Expansionary policy can consist of either monetary policy or fiscal policy, or a combination of the two. It is a part of the general policy prescription of to be used during economic slowdown and recession in order to moderate the downside of economic cycle. Expansionary policies seek to stimulate an economy by boosting demand through monetary and fiscal stimulus. The contractionary monetary policy is driven by increase in the various base interest rates controlled by a modern central banks or other means producing growth in the money supply. The goal is to reduce inflation by limiting the amount of active money in circulating in the economy. It increases money supply that can lead to higher inflation, raising the cost of living and cost of doing business. Contractionary monetary policy increases interest rate and slowing the growth of the money supply. It aims to bring down the inflation. This can slow economic growth and increase unemployment, but is often necessary to cool down the economy and keep it in check. In the contractionary policy, the central banks intended to reduce the rate of monetary expansion to fight the inflation, because inflation can lead to raise the cost of living and cost of doing business. It will cause increase of number of unemployment in our country, and then it will affect the whole economic activity of our country. Exchange rate. When the country is facing a high unemployment rate during a slowdown or recession, the central bank can use the expansionary policy. It aims at increased economic growth and expanding economic activity. As a part of expansionary monetary policy, the monetary authority often lowers the interest rates through various measures, serving to promote spending and make money saving relatively affordable. Increase the money supply in the market aims to boost investment and consumer spending. Lower interest rate means the business and individual can secure loans on convenient terms to expand productive activities and spur more and big-ticket consumer goods. Through expansionary policy, it is lowering the interest rate. It means that entrepreneurs can loan in the banks so business venture increase. It will boost our economy and open many job opportunities to lessen the number of unemployment here in our country. So it will cause a rapid growth of our economy. Objective of monetary policy. First is price stability. Price stability is a goal of monetary and fiscal policy aiming to support sustainable rates of economic activity. Policy is set to maintain a very low rate of inflation and deflation. Central banks needs to maintain price stability to avoid inflation or deflation that can affect the economy of a country. Managing unemployment level. Monetary policies can influence the level of unemployment in the economy. For example, an expansionary monetary policy generally decreases unemployment because the higher money supply stimulates business activities that lead to the expansion of the job market. When business establishment arise, there are many job opportunities. It will lower the number of unemployed. Here in the Philippines, currency exchange rate. Using its fiscal authority, a central bank can regulate exchange rate between domestic and foreign currency. For example, the central bank may increase the money supply by issuing more currency. In such a case, the domestic currency becomes cheaper relative to its foreign counterparts. The central bank need to monitor the exchange rate in the Philippines. The primary objective of the Bangko Sentral ng Pilipinas monetary policy is to promote a low and stable inflation conducive to a balanced and sustainable economic growth. When the price is stable, then we can avoid inflation or deflation to maintain our economic growth. Bangko Sentral ng Pilipinas monitor the currency exchange rate to avoid dominance of foreign currency here in the Philippines. When we have an economic growth, it means there are many business ventures arise that can open a job opportunity, so it will lessen the unemployment in the country. It will result in rapid economic growth.
Good day, everyone. The next topic is inflation targeting. Before we proceed that, what is inflation? Inflation is the decline of purchasing power of a given currency over time. Inflation tells us how prices rise within given period. For the example, if inflation rate for gasoline is 3%, then the price of gasoline is $2 US and may increase in 3% in the next year. So, if the gasoline prices in the next year will be $2.6. The next is how prices measure. CPI or Consumer Price Index is represent the average prices of a standard basket of goods and services consumed by a typical Filipino family to a given period. CPI or Consumer Price Index is computed or calculated by the PSA or Philippine Statistics Authority. For the example is a basket of goods and services costs 100 pesos. Today, the inflation rate is 5%. You would have to pay 105 pesos for the basket of goods and services. In the following years, the inflation rate remain at 5%. In the next year, you will have to pay for almost 128 pesos in 5 years for the same basket of goods and services. When inflation remains high, it means prices are increasing sharply. When low inflation, it more gain benefits to the Filipino lives and support economic growth. What cause of inflation? Prices increase when supply is decreased when the demand is high. Price decrease when supply is high and demand is increased. Price level. The changes in price level will result from interaction of supply and demand. What is the role in relation to inflation? What is the BSP role in inflation to inflation? The BSP control inflation through its conduct of the monetary policy, which is done primarily by moving its policy interest rate. The interest rate for the BSP overnight revised or repurchase facility. The primary monetary policy instrument typically leads to corresponding movement in market interest rates, thus affecting the demand by the household and firm for goods and services. This together with the aggregate supply of goods and services to determine the level of prices. Inflation can be driven by factors beyond the influence of the central bank. This often poses challenges for the BSP conduct of monetary policy. The inflation targeting framework of the BSP recognizes these factors, which can include inflation pressure arising from volatility in the prices of agricultural products, natural calamities, or events that affect a major part of the economy. Volatility is the prices of oil products and significant government policy changes that directly affect prices, such as in the tax structure, incentives, and subsidies. What is inflation targeting? On January 24, 2000, the Monetary Board, the PSP policies making body approved in principle the shift by the BSP to inflation targeting as a framework for conducting monetary policy. Inflation targeting focuses mainly on achieving price stability as the ultimate objective of monetary policy, which this approach the central bank announced an explicit inflation target and promises to achieve it over a given time period. The target inflation rate is set and announced jointly by the BSP government through an interagency body. Although the responsibility of achieving the target rests primarily with the BSP, this joint announcement reflects active government participation in achieving the goal of price stability and government overshoot of the inflation target. Under inflation targeting, the central bank compares actual headline inflation against inflation forecast. The central bank used various monetary policy instruments at its disposal to achieve the inflation target in the Philippines. This involves mainly adjustment in the BSP's key policy interest rate. The BSP formally adopted inflation targeting as the framework for monetary policy in January 2002. What are the features of inflation targeting? Simple frameworks which can therefore be easily understood by the public, allow greater focus on the goal of the price stability, which is the primarily mandated of the BSP, forward-looking, and recognize that monetary policy action affect inflation with a lag, reflect a comprehensive approach to policy by taking into consideration the widest set of available information about the economy, increase the accountability of monetary authorities to the inflation objectives, since the announced inflation target serves as a yardstick for the performance of the BSP and thus help build its credibility, and does not depend on the assumption of a stable relationship between money, output, and prices, can still implemented even when there are stocks that could weaken the relationship. What are the requirements for the successful adaptation of inflation targeting? The first is the firm commitment to price stability. The primary objective of the central bank is to maintain price stability that is conducive to a balanced and sustainable economic growth, such as the central banks could not be bound by multiple objectives such as financing the government's deficit, keeping the exchange rate of a given level, or other policy agenda of the government, unless these are necessary to achieve the goal of the price stability. Next is central bank independence. The central bank must be able to conduct monetary policy without political interference. It must be able to use whatever monetary policy instrument is needed to achieve price stability. The central bank should also have fiscal independence. It must not be constrained by the need to finance the fiscal deficit. Next is good forecasting ability. The central bank should have a good statistical model for forecasting inflation. The next is transparency. The central bank should promote transparency by communicating clearly to the public its policy, action, and the reason behind them. Accountability. There should be accountability on the part of the central bank. Should actual inflation deviate from the target? And lastly, sound financial system. The financial system should be fundamentally sound to make monetary policy more effective in influencing output and prices. The financial system acts as the intermediary by which the BSP influences the supply of money and credit in the economy. Does the Philippines satisfy all the requirements of inflation targeting? These are the requirements for the adaptation of inflation targeting: central bank independence, central bank commitment, good forecasting ability, transparency, accountability, and sound financial. That the Philippines is obtain these all requirements to adapt the inflation targeting. The next is, how did the BSP make the shift to inflation targeting? Since 2002, the BSP has observed the following operational processes in its implementation of the inflation targeting. Target setting process is largely based on the existing framework for condition among government economic agencies under the Development of Budget Coordinating Committee or DBC. In this framework, an interagency body responsible for setting the annual government target for macroeconomic variables, particularly the gross national income or GNI and gross domestic product or GDP growth rates and inflation, which are important inputs in the formulation of the revenue expenditures and financing programs of the national government. The Development Budget and Coordination Committee or DBCC is a provide a meeting or during in the meeting on December 11, 2019 decide to keep the current inflation target at 3.0% in low or high 1.1% point for 2020 to 2002. Inflation targeting is an approach to monetary policy that involves the issue of publicity announced inflation targets set by the government, which the BSP commits to achieve over a 2-year horizon, promoting price stability in the BSP's main priority, and the target serves as a guide for the public expectation about future inflation, allowing them to plan ahead with greater certainty.
Monetary Board. The Monetary Board exercises the power and functions of the Bangko Sentral ng Pilipinas, such as the conduct of monetary policy and supervision of the financial system. The powers and functions of the Bangko Sentral shall be exercised by the Bangko Sentral. It referred as the Monetary Board. It is composed of 7 members appointed by the President of the Philippines for a term of 6 years. The 7 members of Monetary Board are the Governor and Chairman of the Monetary Board, Secretary of the Department of Finance, and the 5 members. The Governor of the Bangko Sentral, who shall be the Chairman of the Monetary Board. He or she shall be the head of department, and his appointment shall be subject to confirmation by the Commission on Appointments. Whenever the governor is unable to attend a meeting of the board, he shall designate the deputy governor to act as his alternate. In such event, the Monetary Board shall designate one of its members as representative. The 5 members who shall come from the private sector must serve full-time, and 1 member from the cabinet. The members of the Monetary Board coming from the private sector shall not hold any other public office or public employment during their tenure to avoid interest or conflicts. The new Central Bank Act establishes certain qualifications for the members of the Monetary Board and also prohibits members from holding a certain positions with other governmental agencies and private institutions that may give rise to conflicts of interest. The governor and members of the Monetary Board may only remove for cause. The Monetary Board shall meet at least once a week. The board may be called to a meeting by the governor of the Bangko Sentral or by 2 other members of the board. The meetings of Monetary Board may be conducted through modern technologies such as, but not limited to, teleconferencing and video conferencing. The Bangko Sentral shall maintain and preserve a complete record of proceedings and deliberations of the Monetary Board, including the tapes and transcripts of the stenographic, either in their original form or in microfilm.
Good day, I am Malapit Martires F, who will discuss in the exercises of Monetary Board on its authority. First, Monetary Board shall issue the rules and regulations it considers necessary for the effective discharge of the responsibilities and exercise of the power vested upon the Monetary Board and the Bangko Sentral. Meaning to say, the Bangko Sentral is responsible in issuing rules and regulations that consider necessary, and also the rules and regulation issued shall be reported to the President and the Congress within 15 days from the date of their issue. Second, the Monetary Board shall direct the management, operations, and administration of the Bangko Sentral, reorganize its personnel, and issue such rules and regulations as may deem necessary or convenient for this purpose. Meaning to say, all the management, operation, and administration of the Bangko Sentral will be direct in Monetary Board, as well as reorganize its personnel and issue such rules and regulations. Also, the illegal units of the Bangko Sentral shall be under the exclusive supervision and control of the Monetary Board. Third, the Monetary Board shall establish a human resource management system which shall govern the selection, hiring, appointment, transfer, promotion, or dismissal of all personnel. Such system shall aim to establish professionalism and excellence in all levels of Bangko Sentral accordance with the sound principle of the management. Meaning to say, Monetary Board is responsible in establishing human resource management system which shall govern the selection, hiring, appointment, transfer, promotion, or dismissal of all personnel. This system is also aimed to establish the professionalism and excellence in all levels of Bangko Sentral. In addition with that, a compensation structure based on the job evaluation study and wage surveys subject to the board approval shall be instituted as the integral component of the Bangko Sentral Human Resource Development Program. On the recommendation of Governor, appoint the fixed remuneration and other emoluments and remove personnel on the Bangko Sentral, subject to pertinent civil service laws, provided that the Monetary Board shall be exclusive and final authority to promote, transfer, assign, or reassign personnel of the Bangko Sentral, and these personnel action are deemed made in the interest of the service and not disciplinary, provided further that the Monetary Board may delegate such authority to the Governor under such guidelines as it may determine. Fourth, the Monetary Board shall adopt an annual budget for and authorize such expenditures by the Bangko Sentral in interest of effective administration and operation of the Bangko Sentral in accordance with applicable laws and regulations. Meaning to say, all the adaptation of Bangko Sentral is accordance to applicable laws and regulations, such as the annual budget for, interest for the effective administration and operation of the Bangko Sentral. Lastly, the Monetary Board shall indemnify its members and other officials of the Bangko Sentral, including personnel of the department performing supervision and examination functions, against all costs and expenses, reasonability incurred by such persons in connection with any civil or criminal action, suit or proceeding to which he may be or his made a party by reason of the performance of his functions or duty, unless it's finally adjudged in such action or proceeding to be liable for negligence or misconduct. Indemnify means compensate for harm or loss, or in other words, it is repay or payback. So meaning to say, any irresponsible action on his or her performance, on his or her functions or duties is needed to indemnify or pay back unless it is finally adjudged or determined in such action or proceeding to be liable for negligence or misconduct. In fact, liable for negligence means a person who acts intelligently never set out or intended to cause a result like an injury to other person.
Good day everyone, my name is Joanna Lee S. P. Dionson. I am the 5th reporter of this group. I will discuss about monetary operation. First, what is monetary operation? Monetary operation refer to the buying or selling of government securities, lending or borrowing against underlying assets as collateral, acceptance of fixed-term deposit, foreign exchange swap, and the use of other monetary instrument of the Bangko Sentral aimed at influencing the underlying demand and supply condition for central bank money. Monetary operation refer to the implementation of monetary policy. It ensuring that a central bank's policy decision has the intended impact of financial markets and on the economy more generally. For operational purposes, day-to-day tactically target is usual to achieve a particular level of interest rates or the exchange rate, and the most efficient instruments are those which the best complement the workings of a market system. BSP security are monetary instrument issued by the BSP for its monetary policy implementation and liquidity management operation, to steer short-term market interest flows towards the policy rate and influence liquidity condition in the financial system. Next, the interest rate corridor or IRC system. An interest rate corridor is a system for guiding short-term markets interest rates toward the central bank target or policy rates. It consists of a rate at which the central bank lends to banks and the rate at which it takes deposit from them. In a standard corridor, the lending rate will be above the central bank target or policy rate and the deposit rate will be below the central bank rate, thereby forming the lower bound. As you can see in Figure 1, the IRC system is intended to help ensure that money markets interest rates move within a reasonably close range around the BSP policy rates. The close relationship the policy rate and the market interest rates provides a fundamental basis for monetary policy transmission. Through the IRC system, the BSP is able to generate a more effective policy signal as market rates closely track the policy target rate. While there is no consensus on the width of corridor, international central banking practice suggests the use of a narrow and symmetric corridor. The use of corridor width is determined largely by the importance assigned by the central bank to the amount of interest rate volatility. The central bank's preference on the extent of country parties relies on the central bank liquidity facilities and the degree of interbank market activity. In the case of the Philippines, a narrow corridor allows the PSP to provide clearer guidance of market and limit interest rate volatility, particularly in the initial stages of IRC implementation. Next, under objectives of IRC system. Upon implementation of IRC system, the use of narrow corridor combined an action-time liquidity operation will help the BSP to influence short-term market interest rates to move closely with the BSP rates, in the process strengthening the transmission of changes in the monetary policy stance to the rest of the economy. Over time, the IRC is expected to aid in the further development of Philippine capital markets by fostering money market transaction and active liquidity management by Philippine banks. Increased trading in the money markets will strengthen the price discovery process in money markets by providing participant and monetary authorities alike with information on the prevailing cost of and demand for liquidity in the financial system. This in turn will promote the establishment of more accurate interest rates benchmark that will help facilitate the effective and efficient pricing of financial products in the domestic market. The proposed reform in the monetary operation framework is also the line with international practice in monetary policy operation. Next, under features of BSP IRC system. The structure of the BSP IRC system is shown on the right-hand side of Figure 2. This figure. The interest rates on the standing overnight lending and the standing overnight deposit facilities form the upper and lower bounds of the corridor respectively, with the policy rate located in the middle. The interest rates for the two standing facilities that form the upper and lower bounds of the corridor have been set at 50 basis points around the target policy rates. Other changes are as follows. Next. Number 1. The RP facilities was replaced by a standing overnight lending facilities or OLF. The RRP facilities was transformed into overnight RRP offered at a fixed rate equivalent to the policy rate. And last, the SDA term facilities was replaced by standing overnight deposit facilities or ODF and the function-based TDF. To ensure smooth transition, the BSP maintained the same set of qualified counterparties for the facilities under the IRC system. Eligible counterparties for the RRP facilities and the OLF consist of banks and non-banks with quasi-banking function. Meanwhile, eligible counterparties of the TDF or ODF includes banks, NBQBS, and trust entities. When we say NBQBS, it is non-banks with quasi-banking function. Similarly, the prohibition on non-resident funds in the BSP facilities for monetary operation shall be maintained. At the same time, the prohibition on the sale, discounting, assignment, and negotiation of banks or quasi-banks of their credit rights in TDF or ODF and RRP with the BSP to clients either with or without recourse basis shall be upheld. The objective of using active money operation through the TDF and RRP facilities is to bring market rates inside the corridor and nearer to the BSP policy or target rate. The main benefit of active monetary operation is that the volume of operation can be adjusted depending on the monetary authorities' assessment of how much liquidity will need to be siphoned and injected to ensure the market rates move in line with the policy rate. In principle, larger and more frequent operation can be undertaken depending on the needs of the market. The BSP, however, opted to start with a small auction volume in order to prevent any undue tightness in liquidity condition as well as ensure that counterparties are sufficiently prepared to shift to the new operational framework. Okay, standing liquidity facilities. These are available on demand to qualified counterparties. The overnight lending facilities is in principle not constrained in volume but in practice depends mainly on the available collateral held by the BSP counterparties. Meanwhile, the overnight deposit facilities is likewise unlimited in volume to help absorb any residual system liquidity and constrain market rate from falling below the corridor. Next, ONRRP facilities. The existing RRP facility is transformed into an overnight facilities and is offered using a fixed rate and full allotment method, where individual bidders are awarded a portion of a total offer depending on their bid size. Fixed rate, full allotment allocation helps ensure that the overnight rates sits close to the BSP policy rate. On Table 2 below lists the features on the ONRRP facilities. Frequency of operation, it's daily or 5 days a week. Maturity, overnight. Auction type, fixed rate or full allotment. Auction size, based on the BSP liquidity forecast. Announcement of auction size is the same day. Submission of bids, 2 o'clock to 2:30 p.m. Eligible counterparties, banks and NBQBS, same set of counterparties as present. Type of allocation, pro rata, based on the bid size. Minimum bid amount is 10 million. Minimum bid amount, 20% of auction size. Minimum number of bids is only 1. Announcement of result settlements is the same day. Next, Term Deposit Facility or TDF. The Term Deposit Facilities is a key liquidity absorption facility commonly used by central banks for liquidity management. The TDF is used to withdraw a large part of the structural liquidity from financial system to bring market rates closer to the BSP rates. On Table 3, present the feature of TDF. The BSP offers two tenors, 7 days and 28 days. In its terms deposit, the possibility of offering longer tenor can be considered in the future, depending on the liquidity needs and preference of the market. Predetermination is prohibited for the 7-day tenor, but it is allowed for the 28-day tenor after a 7-day holding period at the appropriate pre-termination rate. The TDF auction will be operated using the variable rate, multiple price tender, in order to bring short-term interest rates within a reasonably close to range the policy rate. Okay, next. Under impact on the monetary policy stance. The shift of the IRC system does not represent a change in the PSP stance of monetary policy. The IRC reforms are primarily operational in nature and are not intended to materially affect the prevailing monetary policy settings upon implementation. In the initial stages, the TDF is expected to have a rate between that of the RRP and overnight deposit facilities such that the weighted rate for monetary operation will remain broadly the same. Moreover, the interest rates at the floor of the corridor, where the bulk of the BSP liquidity absorption with the market currently takes place, is being kept steady at the launch of the IRC system. At the same time, short-term liquidity conditions are expected to remain broadly unchanged as funds will continue to be absorbed through monetary operation under the IRC system. In conducting monetary operation, the PSP will calibrate carefully the volume of TDF offerings to achieve a smooth transition to the new system. It should be emphasized that the IRC system is not a multiple interest rate regime. The BSP main policy rates continues to be the overnight RRP rate. Over time, the implementation of the IRC system will allow for recalibration in the other monetary policy tools, including the possible adjustment in the reverse or reserve requirements in line with international norms. Next, under the impact of money market and market interest rates. Money market activity is expected to increase over time as the scale of BSP active monetary operation through the TDF expand in the course of IRC implementation. The rise in TDF volumes and the resulting adjustment in money market rates, along with increased activity in the money markets will in turn help support and price discovery process and the establishment of more accurate interest rates benchmark, thus allowing the yield curve to adjust appropriately. The transition to the new monetary operation regime is expected to be gradual. Money market rates are not expected to rise significantly in the early phase of IRC implementation, given the ample liquidity in the financial system. Over time, however, as the scale of BSP active monetary operation increases, short-term money market rates are expected to rise gradually, tracking the BSP policy or target rate more closely. Interest rates in the primary T-bill market over time are also expected to gradually align with the short-term market rates. The BSP believes that in the long term, the interest rate corridor system will support the capital market development by encouraging more interbank transactions as well as facilitating price discovery and providing benchmark for short-term interest rates. These developments in turn can also serve to improve the overall market conditions for funding by the corporate sector. Next reporter will be Gwyneth Laxi. Thank you.
Good day, everyone. My name is Gwyneth Delaxi and one of the reporter of Group 3, and my report is all about monetary policy decision of BSP. This policy refers to the actions of the BSP to achieve price stability. The BSP main responsibility is to formulate and implement policy in the areas of money, banking, and credit with the primary objective of preserving price stability. With the primary objective of preserving price stability, the BSP is promoting a low and stable inflation conducive to a balanced and sustainable economic growth. So, as of February 11, 2021, in monetary policy decision, the Monetary Board decided to maintain the interest rate on the BSP's overnight reverse repurchase facility of 2.0%. The interest rates on the overnight deposit and lending facilities were likewise kept at 1.5% and 2.5% respectively. The reverse repurchase RRP or borrowing rate is the primary monetary policy instrument of the BSP. In achieving the inflation target, the BSP uses a suite of monetary policy instruments in implementing the desired monetary policy stance depending on its assessment of the outlook for inflation. The Monetary Board noted that inflation is likely to remain elevated in the coming months, reflecting the impact of supply constraints on domestic prices of key food commodities. The next slide is all about the open letter to the President. This letter is to ensure the accountability in cases where the BSP fails to achieve inflation target.
An open letter to the President was been issued on January 16, 2004 with a title of Why Actual Average Inflation Was Lower Than the Inflation Target in 2003. This letter was created in order to promote greater understanding of the monetary policy processes under the inflation target framework. The BSP submits this open letter to the Filipino public to explain why the actual average inflation in 2003 at 3.1% is lower than the government target of 4.5 to 5.5%. This is in accordance with the BSP's continuing efforts to clarify the reasoning behind and the results of its decisions with regard to monetary policy. The next open letter was issued on January 18, 2005 with the title Why Was Actual Inflation in 2004 Higher Than the Government Target? In line with the BSP's continuing efforts to promote better public understanding of the monetary policy processes under the inflation targeting framework, the BSP submit this open letter to the President and to the Filipino public why the 2004 average inflation rate of 5.5% was higher than the government target of 4 to 5%. With this letter, the BSP hopes to clarify the reasons behind such inflation development and the results of their decisions with regard to monetary policy and what they intend to do to ensure the price stability. The next open letter was issued on January 25, 2006 with the title of Open Letter on 2005 Inflation. In line with the BSP's commitment to promote greater understanding of the monetary policy process under the inflation targeting framework, BSP submit this open letter to the President and to the Filipino public to explain why the actual average inflation in 2005 at 7 to 6% was higher than the government target of 5 to 6%. With this letter, the BSP intend to explain the reasons behind the uptrend in inflation and their corresponding monetary policy decisions. The BSP also highlights their continuing efforts to ensure price stability. In an open letter that was issued on January 19, 2007 with the title of Open Letter on 2006 Inflation. The BSP submit this open letter to the President and to the Filipino public to explain why the actual average inflation in 2006 was higher than the government's inflation target. BSP also explained the reasons behind their monetary policy decisions as well as their assessment of the inflation path and policy directions going forward in this letter.
The open letter that was issued on January 14, 2008 with the title of Open Letter in 2007 Inflation. This letter was issued to explain why the 2007 average inflation of 2.8% stood lower than the government's target range of 4 to 5%. Through this letter, the BSP also explained the thinking behind their monetary policy decisions during the year, as well as their assessment of the inflation outlook and policy directions for 2008 and beyond. The open letter that was issued on January 26, 2009 is to explain why the 2008 average inflation of 9.3% was higher than the government's target range of 3 to 5%. The government's target for 2008 was agreed upon by the Development Budget and Coordination Committee (DBCC) on November 29, 2006 and announced on December 14, 2006. It was reflective of the BSP's forecast at that time, which showed a generally declining path for inflation over the next 2 years, with the average inflation expected to fall within the target range of 4 to 5% for 2007 and 3 to 5% for 2008. This outlook was influenced by benign inflation trends during the second half of 2006, driven mainly by lower oil prices, a stronger peso, and generally stable food prices. BSP also explained the thinking behind our monetary policy decisions during 2008 as well as their assessment of the inflation outlook and policy directions for 2009 and 2010 in this letter. The next open letter that was issued on January 28, 2016 with the title of Open Letter on 2015 Inflation. This letter was submitted to explain why the 2015 average inflation of 1.4% was lower than the national government's target range of 2 to 4%. It is also explained the rationale behind the BSP monetary policy decisions in 2015 as well as their assessment of the inflation outlook and policy directions for 2016 and beyond. The government's inflation target of 2 to 4% for 2015 was set by the DBCC on November 28, 2012 and announced on December 13, 2012. And on February 3, 2015, the DBCC reaffirmed its outlook and announced an inflation target of 2 to 4% for 2015 to 2016 as well as for 2017 to 2018. The next open letter was issued on January 27, 2017 with the title of Open Letter on 2016 Inflation. The BSP issued this open letter to explain why the 2016 average inflation of 1.8% was lower than the national government's target range of 3% for the year. The inflation target refers to the average inflation rate during a year. The DBCC sets the target while the BSP announces the target at least 2 years ahead. And this open letter was issued on January 25, 2019 with the title of Open Letter on 2018 Inflation. This letter was submitted to explain why the 2018 average inflation of 5.2% exceeded the national government's target range for the year. BSP also seek to explain the rationale behind their monetary policy decisions in 2018 as well as their assessment in the inflation outlook and policy directions for 2019 and 2020. The BSP was able to achieve its inflation target from 2009 to 2014, 2017, and 2019. So for this reason, no open letters were issued for this period.